Hey guys, I just landed in Manila a few hours ago from Melbourne, then Cebu, but I'll be still here in Manila for the next few days for Stock Smarts Manila. Then I'll be headed to Qatar for AFP and Stock Smarts there. So what I'd like to talk about now is the market's down. It's below 7,200 already as of today. What does that mean? It further confirms whatever downward movement that we have in these types of market. It further confirms that the downtrend is still pretty much intact. It pretty much confirms that the bearish movement of the market is still there as well. So what does that mean to all of you guys? If you are a position trader, by all means, there's still no buy signal. It's still down, it's still bearish, it's still in a downtrend. If you are a position trader, there's still no reversal yet in the market. There's still no semblance that you should actually come in at this point in time. So what should you do? Stay away from the market and wait for a reversal signal. Then, if you are a quick trader, the market is still progressing in its breakdown. It's relatively oversold, but it hasn't really hit a support level yet. So what should be your goal if you are a quick trader? Wait for it until the breakdown starts to progress, would go down even further and hit a level of support. Now you come in when the market's oversold and it has hit a level of support already. But what if you are an investor naman? I've mentioned this in several videos now that the goal of an investor is, number one, to buy good growing companies and that are undervalued. So what do we have right now? A lot of the good and growing companies already, a lot of them have dropped a bit. Some of them, as of this point in time, are now cheap and are undervalued. Example, one of which is Ayala Land. I really believe around 37. It's pretty much undervalued, especially for 1 year time frames. But if you have a longer time frame, 37 pesos becomes as attractive as it can be as well. So look for teams like that, teams that are relatively good, growing, they're pretty much intact whether there's a bearish movement in the market, and the underlying story of its fundamentals is still there and they're still part of the growing economy. You have to remember this, there are risks in the economy, however there are a lot of companies that will still make money in spite of the risks that we have. And for those who don't know what's happening, I've placed several videos about that. Just check it in my YouTube channel and you will see that the economy is still good, but there are certain things, red flags, that may cause investors to say, hey, I'm going to stay in the sidelines first. But other than that, if you want to position in good companies, now would be a good time. But you have to remember, you have to pick good fundamentals for it as well. So right now, I'm off the meeting. This is how I normally go about my day. No, I allow my lifestyle to dictate how I trade the markets. And for those who've been following the videos that I've created, the thing about that is this: I do not analyze my stocks in the morning because I do everything in the evening. Everything that I need to know, everything that I need to transition myself to be able to buy and sell the stock, I do in the evening. So that kanina, 9:30 to around 10:30, 10 plus, I started already transacting on stocks that I wanted to buy, especially for investing stocks. So remember, right now, the market is down. I mentioned this, that since it's down, a lot of stocks are cheaper, a lot of investing stocks are cheaper. So what I did was this: when it hit the stocks that I wanted to come into, I started to buy, then I'm done. Enter password, enter the number of shares, enter the stocks, and you are done. So it allows you to live your life based on your own terms, based on the context that you want to do. So now, after, while I go to the meeting, I'll probably monitor it still, but I'm done already. I don't have to be emotional about it. And that's how you can go about your trades as well. You can segment it in a way that it's based on how you wish to execute, in a way that's less emotions, and in a way that's purely based on technicals or fundamentals, depending on the style, the preference, and the risks that you are willing to take as well. Another thing that I'd like to discuss, and I posted this in Facebook yesterday, was there was a BSP rate hike, meaning BSP increased interest rates from 3.25 to 3.5. They increased it to 0.25%. A lot of people have been pegging that if the BSP would increase rates, it would somehow stabilize the market and it would somehow bring more investors back to the table. However, one day after that, the market's down. Let's see how it works later on in the afternoon. No, I'm saying this under the context of morning trades, that as of this point in time, the market is still relatively bearish as well. In spite of that movement, it's down below the 7,200 level. So what does that mean? In spite of the addition of this news from the BSP, it somehow did not serve as a catalyst as well. What does it do though? Increasing interest rates makes the peso more valuable, meaning keeping money in peso as well would give foreign investors an additional 0.25% extra earnings if they leave it in bonds or they leave it in fixed income instruments as well. Please remember this: there are more people putting money in fixed interest rates, if there are more people, there's such an emphasis already on fixed interest rates, higher interest rates would resolve into a much movement out of the markets, out of the stock exchange, more into bond funds. So that in turn also though, yung nagagawa nun, it lessens the value of those who bought bonds in the past. Their bonds are not as valuable as compared to those who will buy over the next few days and weeks after this increase in bond rates. Let's talk about the markets in general. I mentioned already that it's bearish, it's in a downtrend, it's falling, there isn't any reversal signal. But what I wanted to point out is this as well. If 7,100 does not hold from a technical analysis level, there's now a possibility, there's a risk that the market can now start to decline and go to around 6,800 level. So this actually means that we will go deeper in a downtrend. The market will be oversold, but we don't have any signs of reversal yet. What does that mean if you're a position trader? You better store your cash first and then come in when the market starts to build a solid base as well. As of that point in time, we don't have that, so you better be, I guess, more pinpoint right now as the market is dropping. And I think emotions will be high as well. People are now starting to feel the glut of their losses now, from the highs of 8,900 to where we are now. It's roughly already more than 20%. So people who bought at the top, people who were optimistic that the market will hit 10,000, they're now losing a lot of money. With that also, panic starts to happen, panic starts to unfold. As panic starts to unfold, you have a lot of people who bought late and might want to sell their shares already, and with that you have to remember, more sellers bring the prices down. So watch out for the 7.2 level. If we fail to go back at that level, it will try to hit 7,100, which is where we are right now. But at 7,100, it's not as strong and solid. So we may actually see the market hit around 6,800, or we may see it break down at that point in time. So either it happens or not. Since there's still no buy signal for position and quick traders, it would be very, very prudent for you to stay away first, and then store your cash, and then when you see a sign of reversal, start coming in as well. So that's what's interesting, no? And I feel for those who are panicking, are fearful, that's why it will always go back to how you deal your timelines, how you do your timelines, how you I don't know, just look at it from a perspective of what is your financial plan? Why are you coming into the market? Are you in it to invest? Are you in it because you want to buy good, growing, and cheap companies? So movements like this, especially if the fundamentals are good, shouldn't concern you, shouldn't be scared, but it actually should allow you to push and start buying your stocks even further. And even for trading, you have to understand is every time you trade, regardless if it's a good company, a good trade, there will be mistakes, and mistakes will be made, mistakes will possibly happen. But what's interesting about that is you need to know your charts very well, that if you make the wrong decision, you cut loss, stay away, and then you just live to fight another day as well. So that's what it is. It is what it is. It's all about how you manage your risk and how you actually win. And I hope for those who are losing, you use this time to reflect on those wrong trades, and then you use that as a position for you to make you grow further and do better in the market, because it's a never-ending journey of learning and making your money grow as well. So I just finished all of my meetings for the day, and the market closed below 7,100. We're now breaching the 7,000 level. We're now close to it. The downward progression is still there, and with that, I think the next support level will be around 6,800 already. So what does this mean? Us not holding the 7,100 support level will bring our markets even lower as well. So please remember this, the market is now oversold, but it's still bearish, it's still in a downward progression. There's no signal in sight yet. So I've seen some people start buying already, especially some stocks have started to become cheap. But in a general progression of where the market is headed, we're still bearish, and it's interesting to see how it will still play out. You have to remember this, a stock that's in a downtrend, a market that's in a downtrend, a market that's headed down will continue to go down until proven otherwise. What's cheap can continue to go down, what's falling can continue to just drop and drop and drop and drop and drop and drop and drop. So that's it. I'll give you more updates. Now I'm headed back to BGC. All meetings are done for the day. You know what's interesting though about the movements in the market is this: what's cheap before will continue to go cheap, it will continue to go down. So unless you have a firm semblance that you're looking at it from a fundamental perspective that it's cheap already, don't just buy because you think the price is relatively lower. Buy it because you have a buy parameter for it. Because what was low before may continue to go lower as well. So that's something very, 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 very interesting for you guys to watch as well. That when a market is bearish, stocks that seem relatively cheap, stocks that aren't as attractive, still won't be as attractive because people are selling, and until there's something that will cause people to buy. And I think a trigger for people to buy some more, for me would be something, foreigners just really coming to our markets again, that will serve as a catalyst. So I guess one trigger is that it's relatively cheaper now already than where it was before. So let's see, and I'll keep you posted. The market is dropping. Now, the worst thing that can happen, the worst thing that you can do is to deviate from your plan. If you say you will watch your stocks daily, no matter if it's down, you still watch it daily. If you say that you will cut loss when it hits and break down from this price range, you cut loss as well. Money is lost when you let your emotions rule you. So as the market is dropping right now, it's still in the midst of a drop, it's still in a downtrend. Your goal is to just follow what you've said before. And what I always tell people is this: before you buy a stock, you need to have a narrative already. You need to have a specific price point that should it hit that level, or it should break down from that level, you already have a response. That's why it becomes emotionless, because it's either break out, break down, break down. What do I do? Do I sell or do I hold as well? There must be a reaction. There must be a narrative based on what you would set, so that you're not just buying and selling based on what you're seeing. You're not reactive. Everything should be based on your plan. So the market could even go down lower, but if you follow what you've dictated that you should do, it will cause you to just stick to that, and hence either minimizing your losses, and later on, should it reverse, it will allow you to position also properly at a much better time frame. The market is dropping though, and you are a long-term investor, one of the things that you can actually consider is looking at the dividend yield. So if you are an investor that's investing in dividends, there are a lot of stocks right now that have dropped that are, I think, relatively more attractive already. But again, this entails, so if you want to be a dividend investor, you want to be someone who makes money off of dividends, you look at the dividend yield, then you're looking at the stock that has dropped relatively low already. And I guess the main qualification of this is, even if the market gets volatile, you're really just after the dividends, you're really just after the effects of what you can get, the positive cash flow that you can get from it over the long term. But you shouldn't mind the volatility of it. So for people who like that, for people who are passive, for people who believe they will make money over the long term by buying low and buying stocks that have dropped a bit, that have good dividend returns, this is a good time for you to come in as well. Again, but the mentality behind this is that you won't be scared should volatility happen, should the market drop. Actually planning to cross the street, but it started to rain, so let's try to find another place where we can finish this video. Generally speaking, that's why I love diversifying in other markets, Singapore, US markets, and also in cryptocurrencies, because in instances like this, when the market is down, when the market is breaking down, when the market is in downtrend, it allows me to still have that sense of action, that I still get to trade, but above and beyond the sense of action, it allows me to hedge my investments. It allows me to trade also in markets and opportunities where I know it could still have the possibility to go up as well. So that's why I love the stock market, because the tools that you have via fundamentals and technicals, you can use them, generally speaking, even if you're trading other markets as well. Same skills, same techniques, and how you can actually do it with confidence. So for me, it's not just about diversification, it's about hedging myself, that if the market here is down, it allows me to position for some stocks that are low and cheap. But in a way of trading also, I can use the same skills to trade other markets. That's why I think that's one of the biggest advantages of you having other accounts. It allows you to hedge, diversify, and also take matters into your own hands. That if Nasdaq might be doing well, or the Singapore Stock Exchange might be doing well, you can make money off of it. Or if Bitcoin, cryptocurrencies are doing well, you can also start positioning in that as well. So So that ends today's vlog. No? So if you guys enjoyed or you guys liking this new format, comment below, give me some love, and subscribe as well so you get informed, updated on what's happening in the markets. Again, the goal why I do these videos is that I really just want to see more and more Filipinos trade the markets with ease and confidence, because I really see and I really believe that it can be done, that Filipinos can be financially free, that we can be a beacon of hope around the world, to show the world that you don't have to go abroad to actually make money, but money can be made when you know what to do with the finances that are given in front of you. So that's it for now. I'm excited to see you all this Saturday again and Sunday for Stock Smarts Manila. So I hope this video helps you trade well, trade strong, trade smart. Marvin Germo. See you all again soon.